James Bond, codenamed 007, is a glorious name in the worldwide. In China, Tencent is also a hero, a TMT hero. It was drawn in the blood in the past, like Bond. However, there are still large threats ahead. Unfortunately, the skyfall has already come. Good afternoon, honorable judges and audience. We are so happy to be here to present our research, The Reluctant Hero's First and Last Battlefield on Tencent. Tencent is a successful TMT company. It made a huge success in Tencent QQ and strongly dominates instant message market with 88% market share, accounting for 700 million active users in China. Secondly, Tencent has #1 market share in online gaming industry, which is the most profitable contributor in Tencent's business. Based on large user base and abundant cash generated from gaming, Tencent desires to create a closed ecosystem with sticky users 24/7. Diving into Tencent's financial performance, you will get a better idea about Tencent's transition. Before 2008, Tencent's high-margin products, online gaming, and instant message made Tencent drive growth fast. However, after 2008, Tencent made a decision to transfer to product diversification, which drive margin down significantly. So today, our recommendation is sell. Target price 222 Hong Kong dollars. The business model is our main concern on sell idea. We have 3 sell reasons. First, online gaming, the core business of Tencent, is slowing down. Secondly, product diversification is dilutive and unachievable. Third, Tencent is lack of a new growth trigger on the current stage. Our investment summary part will further illustrate our sell idea.
Now let's come to the first section of our investment summary, gaming slowing down. Firstly, the online gaming industry is close to saturation. Second, Tencent's gaming faces fierce competition. With more games being launched in the market every year, hit games are less common in the market. So Tencent's heavy reliance on hit game is coming to an end. Currently, top 2 games contributes 44% of Tencent's overall revenue, so Tencent's loss might be huge. Third, Tencent lacks in-house development and relies heavily on licensing. So this might lead to pressured margin in the future, given that the squeezed revenue of licensed games of Tencent. Then let's come to the second section of the investment summary, ecosystem, dilutive, and unachievable. So why Tencent needs to build up this ecosystem? Firstly, because it wants to cater to the diversified needs of its customers. Secondly, because it has to do so, because IM is playing a less important role than ever before. Now let's first come to dilutive. This ecosystem contains a variety of online services, but given the stabilizing internet time spent of Chinese netizens, this ecosystem is actually distracting its users away from Tencent's most profit-making IM and gaming. So this leads to margin dilution, with lower margin businesses taking up more share in Tencent's revenue. Then let's come to unachievable. Here, we define unachievable as Tencent's inability to attract and retain its customers in this ecosystem. It fails to attract its customers because IM is on the decline, as average netizen spends less share of his internet surfing time on instant messaging, so Tencent QQ cannot sustainably attract customers to this ecosystem. And why Tencent fails to retain customers in its ecosystem? We have 2 reasons. Firstly, Tencent is always a follower in this winner-take-all market. Let's take e-commerce, the company's strategic focus, for example. Currently, Tencent is a very minor player in these 3 subsectors. So it either stands to lose its tiny market share or has to invest really heavily in CapEx in order to catch up, just like what Amazon and eBay did at their beginning. And the second reason is Tencent fails to provide top user experience services. Let's take SNS, social networking service, for example. Although Tencent has the most unique visitors, it has unproportionately lower time spent per person due to its poor user experience, which also holds true for its search engine and other businesses. So that's our second part. Now let's welcome Carol.
Now let's come to the third part of the investment summary. For large TMT enterprise, new growth trigger is essential. However, big companies like Tencent are likely to ignore small markets. But when these markets expand substantially, fierce competition would cost Tencent a lot to survive as a late entrant. Also, the management is more a group of entrepreneurs and product designers rather than professional managers. They are able to design a large amount of product, but they are not necessarily capable of managing these businesses properly, just like what they did with their search engine and web browser, which performed not ideally and were abandoned just 2 years after they came out. It seems hard to find a new trigger. But WeChat, a mobile instant message tool similar to Line and WhatsApp, might be this trigger. But whether this is a powerful trigger should depend on how well it monetizes. O2O and gaming are the most possible monetization methods, but both impractical in the short term. Our opinion towards WeChat is further supported by valuation. In base case, we briefly assume WeChat monetizes by charging membership fee, arriving at 8.3 Hong Kong dollars per share. On top of this, we add advertising and mobile gaming. We take Facebook for advertising benchmark and arriving at 10.5 Hong Kong dollars per share. This low value is because revenue per mobile user is only 20% of revenue per PC user. We take Line as a benchmark for gaming and arriving at 2.3 Hong Kong dollars per share. This low value is because Asia and China mobile market are relatively small. So together, bull case add up to 21.1 Hong Kong dollars per share, implying just 10% of total share price. We thus conclude WeChat is promising but cannot substantially impact the valuation in the short term. So above 3 are our sale reasons. Historically, Tencent was a successful company, but now its core business is slowing down and the whole company is entering into a transition period, hoping to diversify. The last 12 months PE of 34 times is a bit high, according to our valuation. We do think Tencent is a strong company, but it can hardly justify the current high trading price, and we recommend sale.
So now we come to the valuation part. Our valuation methodology is primarily based on a DCF analysis because as Tencent is getting more mature, its major businesses are rather predictable. Our key assumptions are a revenue CAGR of 20% and a margin contraction to 55% in 2014. Sensitivity analysis. We have identified 5 factors that impact our valuation most, including the gaming revenue growth and the gross margin. On the next page, we'll show the broker's view on these most sensitive assumptions and where we stand among the brokers to just give you a sense. So the blue ones are the outliers that result in a higher valuation for the brokers, and the orange ones result in a lower valuation. First, we see the total price. There's a big gap between the buy brokers and the selling brokers of 40 Hong Kong dollars. Why is that? We look at the sales CAGR. Well, it has a rather consensus view. 6 of the 9 brokers forecast the sales CAGR at a very narrow range of plus minus 2.5, but there are 2 outliers colored in blue that result in a higher valuation. The reason why there's such a difference in target price is because of gross margin. 3 brokers forecast a flat margin and 5 brokers forecast a declining margin, and the 3 brokers result in a high valuation. Our target price, 222, is higher among the selling brokers. This is an overview of the broker's view and where we stand.
Tencent, a TMT giant, made a miracle yesterday. Its large user base has already reached half of Chinese citizens. However, internet industry is so fast changing. Its largest revenue contributor, online gaming, is declining down. The diversification drive margin down, and it is lack of a new growth trigger on the current stage. Tencent made weak by time and fate. This old giant with a heroical heart is walking into its autumn. So what we can do now is to be quiet, just waiting for its final fight. Thank you so much.